Welcome, everyone. We're introducing the first of a new series of webinars. Many of you know that in New York we do 8, sometimes 10 luncheons, symposiums with 3 companies that we select out. And the reason we do this is that if you go to a luncheon, and despite all the good food and drink, which of course we have, you might not be interested in that company. But if you have 3 well-selected companies, then you're bound to have at least one, and very often 2 or 3 that you find interesting. But not everyone can attend this. So what we've been asked to do is to give 3-minute previews of the different companies that we present each time. So we're presenting today the March 25th. Next time we'll do April 17th, and we'll post it on the web. This will be about a 15-minute webinar, and I think you'll find some of them interesting. I know I have very little time these days to constantly look at new companies unless they're pre-selected, and I hope you enjoy my selection. Usual disclaimer. All right. I'm doing this now April 1st, just before the 4 p.m. announcements. We've been bearish, correctly so, in the markets, and we recommend catching our hour-long Q2 2025 stock and commodity forecasts. But it's very simple. If you want to know what markets are going to do, it's as simple as 1, 2, 3. First, there are multiple crises in the first half of 2025. Secondly, we believe there'll be a resolution or a partial resolution by mid-May. And third, it will be clear then the stagflation economy issues will be settled in that the economy is slowing and it will be recession-like or recession. 1, 2, 3. So, previously, everyone in the world was putting money into the United States, both in November and in January. But as we're speaking, they're exiting because of the tariffs. So we can see that the markets, as of yesterday, are down. And we think they'll stay down, the exception, of course, of the gold and silver markets, which are up. And will they go up? Will they go down? And of course, they're going to do both. The question is when and by how much. We do not believe that we're done with the correction, whether it's now or whether it's the summer, or most definitely by the first quarter of next year. And we will be giving an update in May for this. So what we have is a 3x3, 3 company pitches, because by the end of the 3 minutes, you know you have an interest or not. And we're all time pressed. They're all public companies. And if you like the story, we recommend first visiting the website of each of the companies. Secondly, reviewing the PowerPoint presentations. And if at that time you're interested still, sign up for Company Investor News, add them to your investing and trading screens, and if and when it's appropriate for your portfolio, become a shareholder. That's the wish, of course, of all the presenters. So the first one we're going to show is Barton Gold. And why do we like Barton Gold? There are 2 reasons. The first is it's gold, and we don't have to explain anymore why gold is good, but gold companies are extremely undervalued in relation to gold. And the second, it's Australia, which we've added to our favorable country list. Why? For mining, it's safe, friendly mining jurisdiction, and of course, a very cheap currency. Those are very good reasons. So,
hello, investors. I'm Barton Gold Managing Director Alex Scanlon, and I'm pleased to share some insights today with you about why now might be a good time to start looking at Barton Gold and our South Australian development assets. We, of course, note that the current high gold price makes low-cost development assets very attractive. During the past 3 years, we have been quickly working to position our assets for exactly this moment. In this time, we have built a 1.7 million ounce resource base, and we own the only gold mill in our region. Our target is large-scale production of 150,000 ounces of gold annually, And our strategy is to get to this large-scale objective on a staged, lower cost, and lower risk development basis. This also means lower dilution, leveraging our existing infrastructure. Last year, we published an initial scoping study for our 1.6 million ounce Tunkillia project. This demonstrated a fully costed model to deliver 130,000 ounces per annum of gold at an all-in sustaining cost of 1,917 Australian dollars per ounce, or approximately $1,250 per ounce. This is a bottom quartile cost producing asset on both an Australian and a global basis. This project model also delivered a 40% equity IRR and a 1.9-year payback on an unlevered basis. In the next few months, we'll be delivering an optimized scoping study, materially improving on all of these project metrics. In parallel, we are also now working to map out the ideal strategy, the costs, and the feed materials to restart our existing fully permitted Central Gawler mill. This would see Barton Gold transition into operations from 2026. In the next few months, we will deliver multiple updates about the plan, the costs, and the timing of this shift, and we are already considering multiple low dilution funding opportunities to do so. So, during the next 6 months, we expect to share a lot of new insights, resources updates, and study results as we finalize our strategy to move from developer into producer and to show the market a low capex start to a 15-year growth and development pathway from 2026. As a company, we generate millions of dollars annually internally through asset monetization initiatives and gold sales. This has resulted in a much lower dilution to our existing shareholders and a much stronger base of value compared to many of our junior gold peers. The start of operations will mark the culmination of our strategy to crystallize a realizable, multi-billion-dollar valuation pathway with a fraction of the capital typically required to do so. With only a $35 million enterprise valuation, now might be the time for a close look at Barton Gold. The Barton Gold team are its largest shareholders, and we are working as hard for your investment as you did. Thank you for your interest in our company, and I look forward to meeting with many of you in New York in the coming weeks.
Regardless of whether markets go up and down, medical companies that either provide new solutions or lower costs will do well. We're presenting here Clear Mind Medicine. It's revolutionary psychedelics for the treatment of addiction and mental health. And one of the reasons we like it is we personally favor platform biotechs that with fresh good news can easily deliver tradable 2 to 4 times returns. There we go. A little slow in getting the uptake there.
What if a novel psychedelic could be the solution to one of society's most complicated and expensive mental health issues, alcohol use disorder?
MEI is short for 5-methoxy-2-aminoindane. It's a new psychoactive substance, and I believe its ability to treat alcoholism is going to be profound.
In 2014, early users of the novel compound MEAI reported experiences of curbed binge behavior.
MEAI gave us time back. I got a chance to get to know my father in a way that I probably never would have. He calls it the miracle.
The process of drug discovery requires hard science to confirm anecdotal evidence. Clear Mind Medicine saw the potential and acquired certain worldwide patents for MEAI to begin preclinical trials in accordance with FDA regulations to hopefully obtain an approval for MEAI as an alcohol use disorder drug treatment.
We're standing at the intersection of science and mental health, and our vital next steps are to show that MEI is safe, it's non-addictive, and that it effectively curbs binge behavior. And I'm delighted to say that we see initial promising results in all three categories.
While existing treatments are limited and largely ineffective, a surge of interest in the field of psychedelics has opened the door to important research in the hope of finding real solutions for millions affected by alcohol addiction.
12-step movement, it works for about 20% of people, 15-20%. That's pretty good compared to a lot of other treatments, but it's still not nearly enough. So I'm totally support the search for new solutions.
Join us as we work to develop a regulatory-approved, life-changing treatment that could impact families and communities across the world.
Our third company is Portofino Cosmetics. The reason we like it is because the cosmetic industry is highly profitable, but on the other hand, it's highly competitive. What's unique about this company is the development of AI in cosmetics, and I don't think I need to say anything more, but there is a lot more. They have multiple shots on the brass ring. They are putting together a number of small brands that are niche markets in cosmetics, and they'll be producing them, in addition to which they're developing their own, not only in AI and cosmetics, but in some medical beauty situations, as well as some functional beverages. Unfortunately, a lot of this is not ready yet, so we're not presenting the 3 minutes. So we just recommend tracking it. Portofino, it's on the TMX exchange, the Toronto FTI, and just watch it. It's going to be very interesting. We hope to present them very shortly, but at the moment, everything's sort of up in the air, which puts it as very high risk, but potentially very high reward. So what do we recommend, given the way markets are and our views for the next 12 to 15 months? Be very cat-like. Accumulate, buy on weakness. Make a list of your favorite stocks, commodities, and of course, include some special situations. Wait. When the time is right, pounce.